What if the next global crisis doesn't start in a boardroom or battlefield, but on an EV factory floor in Detroit? A single tariff move has sparked a domino effect. Crumbling alliances, frozen investments, rare earth chokeholds, and a trade war turning financial. Japan's making quiet exits, Canada's switching lanes, and the EU's redrawing the map. This isn't just about cars, it's about power, politics, and the future of global order. What's coming next could change everything.
The tit-for-tat tariff dispute continues without pause between the world's two largest economies.
As you all know, the president just put out a statement announcing an additional tariff on China. The tariff on China will now go up to 125%.
As we have been reporting, the White House says its tariffs on China now total 145%.
China halts U.S. investments abruptly. China has suddenly halted all outbound investments to the U.S., citing political tensions and a need to protect its national assets. The move, led by China's Foreign Exchange Authority, cuts off a major flow of capital that once supported U.S. tech, real estate, and auto industries. Wall Street reacted quickly. The Dow plunged 1,700 points in 2 days. Companies like Apple and Tesla took major hits, but EV makers face deeper trouble. Chinese investment has funded battery research, factory growth, and mineral deals. With that support gone, America's EV future just became a lot more uncertain. This isn't just about money, it's a strategic shift. China's drawing a bold new line, signaling the unraveling of economic interdependence. With a grip on over 60% of the world's rare earth supply, they hold the levers behind core EV components. For U.S. automakers, that spells potential delays, rising costs, and a scramble to redraw their supplier maps. What used to be a shared trade corridor is now a geopolitical fault line, and electric vehicles are right at the epicenter. And the ripple effects aren't stopping in Beijing. Tokyo's stepping in with its own statement, one measured not in speeches, but in dollars and debt. Japan unleashes debt retaliation. Japan, long seen as America's most reliable financial partner, is now making quiet but powerful waves, unloading U.S. Treasury bonds in response to Trump's high-voltage EV tariffs. These duties, peaking at 104%, aren't just aimed at China. Japanese giants like Toyota, Honda, and Nissan have been swept into the crossfire. For Tokyo, this goes beyond trade policy. It cuts deeper. After decades at the forefront of hybrid and EV breakthroughs, Japan sees these tariffs not just as economic pressure, but as a direct insult. Japan is dialing up pressure on the U.S. by cutting back on its treasury holdings, a move some now call the Treasury bomb. This shift drives up U.S. borrowing costs, lifts interest rates, weakens the dollar, and fuels inflation across daily goods and EV production. But Japan's move may spark a broader trend. South Korea is reconsidering its stance, and India is strengthening ties with ASEAN. What began as a tariff dispute is turning into financial warfare. If Japan is stepping back from U.S. debt, the bigger question is, who's next? Canada, just north, may already be making its move. Before we dive further into the story, do us a quick favor. Hit that like button and subscribe to stay in the loop. It helps us bring this content to more viewers who care about how the world is shifting beneath our feet. Now, let's keep the momentum going and explore what's unfolding next. Canada breaks trade alignment. In a marked departure from decades of cross-border cooperation, Canada is pulling back from its long-standing trade alignment with the U.S. What began as symbolic pushback has now turned into a series of concrete moves, pulling American goods off shelves, halting trade negotiations, and forging new economic ties with Europe and Asia. So what's driving the rift? For Ottawa, Trump's EV tariffs aren't just seen as economic self-defense, they're viewed as a destabilizing hit to a long-standing partnership. American-made EVs are now facing tighter scrutiny at Canadian ports, disrupting the vital trade corridor that supports key manufacturing hubs in places like Michigan and Ohio. At the same time, provinces like Ontario and Quebec are doubling down on partnerships with Hyundai, Kia, and European automakers, actively charting a future that doesn't depend on U.S. supply chains. The economic contrast is hard to miss. While the US wrestles with inflation and a shrinking GDP, Canada is moving ahead with 3.2% growth and rising investor confidence. For EV manufacturers, this marks a serious setback. Canada has long served as a strategic gateway into the North American market. If Ottawa completes its pivot, U.S. automakers risk losing both a major export destination and a trusted trade partner in one clean sweep. And just when it seems the pressure couldn't mount any higher, China tightens control over the one area that matters most: critical mineral supplies. Rare earth squeeze hits EVs. China's latest move, tightening rare earth exports, could be the most pivotal shift yet in this economic standoff. These 17 critical elements, especially neodymium and dysprosium, are foundational to everything from EV motors and semiconductors to advanced defense systems. With China commanding over 60% of the global supply, its hold over this strategic resource is sending shockwaves across industries. For companies like Tesla, Rivian, and Lucid, the impact is already being felt. Slower battery output, delayed production timelines, and rising costs across the board. Automakers are beginning to adjust prices accordingly, with some analysts forecasting a 10 to 15% surge in EV costs in the months ahead. While nations like Australia and the US do offer alternative sources of rare earths, scaling up mining and refining isn't a quick fix. Environmental regulations, funding gaps, and community pushback have already slowed progress. And the pressure goes far beyond electric vehicles. These materials are essential to everything from smartphones to fighter jets. Still, EVs are likely to bear the brunt of the disruption. Without a rapid and diversified strategy, the US could fall behind in the global EV race. But rare earths are just one fault line. The deeper threat? A spiraling tariff war that's starting to rattle the very structure of the global economy. Tariff chain sparks economic slide. It began with a 104% tariff, but now the US is slapping up to 145% duties on a wide range of Chinese imports. China fired back with its own countermeasures, and the trade war is rapidly intensifying. The EU is preparing a 25% response, Canada's raising new trade walls, and emerging economies are quietly pivoting away from US markets. The impact is hitting home fast. Jobless claims are up. The Dow has dropped 7% in 2 weeks. Big retailers like Amazon and Walmart are reporting losses, and consumer confidence has plunged. From housing to small businesses, pressure is building across the board. For EV makers, this is the nightmare scenario. Material prices are climbing, supply chains are grinding to a halt, and consumer demand is shrinking fast. Startups are hanging by a thread, and even major players are hitting pause on their EV rollout plans. On the global stage, economists are sounding the alarm over a looming US GDP contraction. Key allies in Asia are rebalancing their priorities, and trust in the US dollar is beginning to erode. This has moved far beyond a simple trade clash. It's an economic tremor shaking the system at its core. The US now faces a critical crossroads: adapt quickly or risk falling behind in a rapidly shifting world order. The verdict: global trade rewritten. And now we've arrived, at the edge of a global trade rupture that's burned bridges and rattled markets from Beijing to Berlin. China's tightened its grip, Japan's recalibrated its financial play, and Canada's veered into new lanes. The US stands at a decisive crossroads: forge fresh alliances for a new era, or double down on isolation. For EV makers, this moment is make or break. With rising production costs, fractured supply chains, and wavering consumer confidence, the road ahead is anything but smooth. The decisions made now won't just shape the next quarter, they'll determine who drives the future of mobility. But what's your take? Is the US leading a new trade era, or falling behind in a global reset? Can EV makers survive without China, or is interdependence the new rule? Are rising prices and fractured supply chains the new normal? Or just a phase? Let us know your thoughts in the comments. We always value sharp perspectives from viewers like you. And if you haven't yet, consider subscribing to Globeline so you never miss an update on the forces reshaping global power, policy, and innovation. Thanks for watching. And as always, stay informed, stay curious, and keep drawing new lines.